Welcome, everyone, to Boardroom Beyond. I'm delighted to be here today to have a very interesting discussion about navigating emerging markets governance. And we've got an expert in that domain here with us today. We have Laurence Loyer. She is a director on the board of Corsico, Vitalis, Biocidis, Grupo Cerveal, and she is also a member of WCD's Argentina chapter. So welcome so much, Laurence. We're so pleased to have you here. We'd love to just kick things off with you telling the audience about your background and some of the roles that you have in emerging markets.
Thank you, Jennifer, for inviting me. I'll go quickly. Thank you for introducing me. I'll go quickly over my background in emerging markets so that people can relate to where my remarks are coming from. I've been a board member in emerging markets for the past 14 years in diverse industries, mostly financial service and pharmaceutical companies in Argentina, Chile, Colombia, Mexico, Uruguay, in various countries of Latin America, and with various ownership structures of every company. So one of my current board portfolio is a listed company on the New York Stock Exchange. Another one is a multi-family ownership style company, and other ones are owned by private equity and sometimes by DFIs, which are development finance institutions. So that has helped me get a pretty diverse perspective on navigating the emerging market, and hopefully after this conversation, people get a sense of how sheerly interesting it is to work in emerging markets, and yeah, maybe get interested in getting roles in emerging markets as well. Oh, I forgot one thing. My executive background. I'm a CFO. Prior executive background is chief financial officer in the subsidiary of a large US multinational. And my academic background is I earned a Bachelor of Commerce and an MBA from McGill University in Canada. And I'm French, so people get where this accent is coming from.
That's great. Well, thank you. I'm a McGill alumni too, so you're in
good
company.
Great.
Yes. So I wanted to kick off the discussion with really just your perspectives on the challenges right now in emerging markets. Obviously, geopolitically, things are challenging everywhere, but specifically to emerging markets, as you think about challenges, risks right now, what are you thinking about as a director?
Okay. Yeah. Let's give the listeners some dimension of what the turbulences are like in the emerging markets right now. And I'll give the example of Argentina and Chile. In Argentina, for instance, in a day, the interest rate may change 20 points. In a day, the devaluation might be 50 points, 50% devaluation. And in a year, inflation can reach 200%. So this is very, very crisis-like, crisis management style. What do you do with your price list, for instance? In Chile is much more stable from an economic standpoint, but is currently in the midst of three critical policy reform change: tax reform, pension reform, health reform, which are potentially game changers for the private sector. So you have to navigate these turbulences. And your question about the most critical challenge, basically, I'd say the most critical challenge is to have access to capital or debt to fuel growth when you need it. And why is it the most critical? It's the most critical because generally the local capital markets are too shallow to basically fulfill the needs of the private sector. So you need to go to the international investor. But the international investor appetite for emerging risk is very unpredictable. And I'll give you an example of that to illustrate, right? In one of the board that I'm sitting on, we did an IPO. And in 2011, we were literally a week from jumping on a plane for the roadshow, when the government decided to expropriate the largest oil and gas company, which happened to be a publicly traded company in the New York Stock Exchange. Immediately after the expropriation, the markets closed and we could not do the IPO in 2011. And we had to wait until 2015, 4 years later, to eventually do a successful IPO. So what do you do during 4 years? You have no capital, you have no debt, you know, so you have to find a solution. This is why it is key to seize the opportunity to basically reach out for capital and debt when it is available.
So how are companies navigating all of this high inflation, like you've just mentioned, interest rates, debt burdens? What are companies doing to try to navigate all of these complexities right now?
It's you have a dual agenda. You have the crisis mode agenda, which tends to be quite nearsighted, and you have the strategic agenda, and both have to get to get delivered or to get proper attention. In general, I'd say that in the emerging countries, the more tactical, nearsighted agenda gets a lot more attention than it would in a developing country. I remember when I first joined an emerging country board, I wanted to only to talk about strategy, only to talk about pillars of corporate governance, and it was impossible to get management attention when the current crisis at hand was not first tackled. So I'd say basically you always have an eye on the political policy changes and the regulatory changes, and the other eye on the economic indicators. While doing this, you also need to make sure the strategic agenda is attended. So to make a long story short, I think it means that it requires more board dedication than in developed countries. Because, and I'll give you two examples of why it requires more board dedication. One of them is, if you do not take care of your employees' purchasing power yourself, your employees will do it on office hours. You will lose productivity, you will lose motivation, you will lose talent to the competition. So in order to take care of that urgent need, the remuneration committee is likely to operate more frequently. Every 2 months is the norm, and you might have to make, you know, exceptions to the rules or the policy. For example, do we pay the bonus in advance, part of the bonus in advance? What are our competitors doing? Do we need to do it? So, you know, this part is rather nearsighted and requires some time and is very critical. And the rest of the board agenda, also the strategic part of the board agenda, has to be taken care of. So if time is not sufficient in the regularly scheduled board meetings, you're likely to have ad hoc meetings to be able to pursue on the strategic agenda.
Something to think about for people who are considering these opportunities, for sure.
Sure.
Important point. So I wanted to talk a bit about stakeholder activism, and you know, is that happening in a broader scope, a bigger voice in emerging markets? What are the trends there?
So I'd say the ESG agenda is emerging in emerging markets, and we're basically following the Western world. We're followers. That's what I mean, and we're mostly followers, unless your company is publicly traded, in which case you're not followers, you're part of the Western world, so to speak, or if your company has a shareholder, high standard private equity or development finance institutions, for example, in which case also the standards are really high in ESG. For the rest of the companies in Latin America, I would say that the social part of the ESG agenda is the most natural to the emerging countries because poverty, inequalities of all sorts, whether income, health, or education, is on the news every day. And there is an acute sense in the emerging market that you need to take care of the well-being of the communities in which you operate. There are very strong NGOs operating, tackling those needs, unfulfilled needs that the emerging markets have. And what works really well is partnerships between NGOs and corporations to have an impact on the social aspect of ESG. On the governance aspect of ESG, I'd say there are great improvements. I've seen great improvements in those 14 years of experience, mostly driven by the financial markets and also by the regulators who are creating an incentive to increase the bar, the standard in corporate governance. But there are still some delays, and I will give you an example which will be of interest to WCDs. Basically, one of the aspects of governance that is showing some delay is the participation of women on boards. In Latin America, there are 15%. The participation of women on board is about 15% and has not changed very much in the past 10 years. If you compare to the States, this number among the S&P 500 is about 27%. And if you compare to Europe, some countries of Europe have as high as 40% participation of women on boards. So there is still room for improvement on the corporate governance side. But more generally, I'd say that the environmental portion of the ESG is probably what needs more work in emerging countries still.
You mentioned, just general governance trends in emerging markets. So maybe we'll dig into that a little bit as you think about corporate governance. I mean, how can it be a differentiator for companies? And, if they have done a lot of work in that area, and what kinds of skill sets in emerging markets in particular are those boards looking for?
Wow, I love this question, Jennifer, because corporate governance has proven to be a powerful tool and to raise capital, to raise debt. We all know about that. In developed countries, it's the same. That's a given. But what is new or what has come clear in emerging market is that corporate governance is also a powerful tool to land commercial contracts. Let me give you an example. On one of the board that I'm on, we have just signed a licensing agreement with Novartis. And Novartis made it clear that the reason why this talented CEO landed this agreement was because of the high standards of corporate governance that our company has over the competition. Because, of course, those world-class players want to make sure that they're not exposed to any reputational risk with their partners, and also want to make sure, in the case that they transfer employees, that we will know how to take care of them. So let me tell you about the board of directors' satisfaction when the CEO came to the board and said that he had not realized until he landed this agreement how much payback would he get from investing in corporate governance. Because of course, when you improve the corporate governance standards, everything, the work is significant and the investment is big, but there is payback. So it's a key differentiator, which is what you just said. It's a key differentiator for emerging countries. The skills, when you said the skills needed, do you refer to the board skills
Yeah,
that
the
you?
board skills that are really highly sought after for those boards in emerging markets.
I'd say that maybe the first one is a proactive board member, solution oriented, and flexible as to the priorities to be able to take into account immediate priorities and not just the long term strategic issues that every board member thrive to resolve. Someone that is available, that has the time, the dedication required to be a part of an emerging uh, board. Someone that has experience in corporate governance, because of just like we said, since it's a differentiator, someone has to lead this change, and it is best if it's at board level. It is more efficient if it's at board level. And I'd say that market discipline experience is also very good in order to be able to professionalize um, the company that you're sitting on.
That's great. Well, maybe you can leave us with what you think should be top priorities for the board agenda in emerging markets today.
Okay, top priorities. It's a bit, I think with this question, we're circling back to your first question. The priority for me is to have your organization ready to seize an opportunity, whether it is a financing opportunity or a strategic opportunity, because the windows sometimes close and for a long time. It might be necessary to anticipate preparation of a prospectus or preparation in a digital transformation process in order to be the first with an offering uh, at the market, because there's a premium that goes with it. So this is number one priority for me: organization ready to seize the opportunity when it presents itself. And second priority is the corporate governance, high standard of corporate governance, not only because it differentiates yourself, which we've seen already in the conversation is key, but also because it's a cultural change in the organization. It allows management to focus on the priorities of the business. It makes your company more attractive to available talent, and it increases productivity at the end of the day. So those would be my two priorities.
Thanks, Laurence. And thank you so much for joining us here today and sharing your perspectives with the WCD members. Really interesting perspectives on corporate governance in emerging markets, which I think people will welcome the information from this discussion. So thank you for joining us.
Thank you, Jennifer, very much for your questions and interest.